So I'm excited to share that two new members of the group, Engel and Tucker Cadow from the Research and Investment in Sustainable Equity RISE group at Middlebury College, have agreed to volunteer to be the first group to test out this format. And they have a presentation up that everyone should be able to see. So I'll hand it over to them to give us a little bit more information on their work in the space.
Great. Well, we're excited about being the first to go, and we'd love to share with you guys a little bit more about what we've been doing over the past 5 years. So is everybody ready?
You bet.
Perfect. All right, so we are RISE. I'm gonna actually switch back a slide. It's a beautiful acronym, Research and Investment in Sustainable Equity. It's pretty simple. We invest in global equities. We're sort of restricted on what we can invest in. That's sort of our investment thesis. We were founded back in the spring of 2014, and we're born really out of this club called the Socially Responsible, that was having a sort of a battle with the administration over the divestment movement. And so they were engaged in numerous conversations with the administration, and ultimately, to try and get the issue to go away, the administration gave seed money to a new club, RISE, and said, we would like you to focus on sustainable investment and see if you can translate your vision of divestment and what that means for the college into tangible results. And so the Socially Responsible Investment Club was given $150,000 in seed funding after the spring of 2014, I believe, during the summer, and they invested that fall. And currently we hold $195,000 in both equities and cash.
All right, so I'll talk a little bit about our current status. As Rob just mentioned, we currently have holdings both split between equities and cash of roughly $195,000. And we meet once each week on Mondays. And we've roughly doubled in membership this year, which has been great for us. And we've also added industry groups into our club, which are, we've split them into energy, industrial, healthcare, and technology. And so we have an industry group leader for each one of those, and the industry groups meet outside of our weekly scheduled meeting. So each industry group oversees the relevant club holdings, and they review the quarterly earnings reports and present buy and sell pitches on the companies within their industry. So our club is structured in the following way. We have we have two co-presidents, and this year that's Rob and myself, and then we have two co-vice presidents, one treasurer and one head of education. And we stay in contact with Caroline McBride, who's the co-founder of Foreign Partners and also a Middlebury trustee. And she actually spearheaded the club's inception back in 2014 and remains a resource and advisor for the club throughout the year. But we also have an advisor on campus, Michael Schozer, who's a professor who teaches finance classes here at the college, who we go to with more immediate questions and for just general advice.
Great. So we obviously were born out of this divestment movement, and as a result, we have a very strong history in looking towards more sustainable forms of investing, and over the course of our history. And the metric that we've used and sort of the philosophy that we've used throughout the portfolio's history is ESG investing. And that's difficult to replicate each year because we've had very high turnover. The first group that came in was a bunch of seniors, and their vision, their type of investment strategy did not quite translate over between 2014, 2015, and 2016. There was a lot of high turnover within the group. And so one of the main things we've been trying to do is to instill ESG as a more centralized philosophy within the group. And so we have a pretty strong investment thesis that's on our website, and I'm going to read it for you right now. That is that we invest in global equities that meet ESG standards and that have above average potential to appreciate in value. We believe that companies that are environmentally and socially conscious are strongly positioned to maintain market share and succeed in the future, making them solid candidates for long-term investments. And so as a club, we sort of see ourselves with two goals. The first and the primary focus of the group is education, both financial literacy as well as education around renewable energy, more sustainable forms of finance. We're always sending out articles from Morgan Stanley about how they're developing their ESG portfolio and how they're looking into investing different way or sustainably in different ways. So a lot of the focus of the club is looking for different means of giving the kids in the club education around both the business concepts, financial literacy, and sustainability. And then obviously the second is the capital gains portion, which is important to any investment club, but particularly important to Middlebury's because of the divestment movement that underpins the club's founding. As I mentioned before, divestment was a major reason why the club was formed, and the incentive is, and we've sort of had to embody this, is we are attempting to replicate what divestment or preachers of divestment say will happen if a more sustainable portfolio is created for Middlebury College and the college ultimately divests. So the capital gains portion is very important, and so we are actively reviewing our holdings, looking at what we can do better, looking at industry-wide trends. So yes. And so this investment process, as I just mentioned, it's focused both around the business aspects, but also around ESG. And we found that actually, I mean, as you all probably know as well, it can be pretty challenging to put those two together, especially in an educational context where everybody's got lots of classes. Not only are you trying to look at people who are picking stocks and sort of figure out which ones you like as well, but you're also looking at the underwriting factors, the underwriting risks and opportunities in the environmental space and social space and in the governance of a company. And you're trying to put all this information together and create a thesis. So the process is twofold: business and ESG. We like to look at macro factors. The reason we split into 4 groups is we think that there's high growth potential in each of those sectors. We look, when a group member approaches us with an idea about a business, we look into their 10Ks, we look in their annual reports, we look at their quarterly earnings. We create small models looking at comparables charts and DCFs. And then we also have other individuals within that industry group simultaneously look into their ESG rating and their sort of the environmental impact of their business. And so ultimately that culminates into a pitch that combines these two elements. And the group has had multiple conversations, especially this year, about the sort of the weight of the decision, both from a business and an ESG perspective. And so at the end of the day, after a group has done all this work, they will present to the group. We will have a discussion and then vote about whether to add it to our portfolio, given the factors above.
So I'll go over quickly our current holdings within our portfolio. So to start off, we own we own a half position in Badger Meter. So typically a full position we consider to be $20,000, and then a half position we consider to be $10,000. And so Badger Meter manufactures products that use flow measurement and control technologies And then we also own a half position in Biogen. Biogen's a biotech company that specializes in the development of treatment of diseases such as MS and Alzheimer's. And then we also own Hannon Armstrong, which is a sustainable infrastructure REIT that owns renewable assets that it leases to operators in addition to making investments in energy efficiency and renewable energy. Our most recent position that we've added to our portfolio is NextEra, which is the leading producer of wholesale renewable energy in the US. And they also have a branch that's of their company that's a utility rate provider of electricity in Florida called Florida Power and Light. Our other two positions are in Novozymes, which is a biotech firm based out of Denmark, and TPIC, which manufactures composite wind blades.
And then currently, before the end of the year, we're taking a peek at 3 different companies to add to the portfolio. We're looking at a Danish healthcare and equipment supplier called Ambu, Cisco, which you all know, and then Adidas, which is obviously an apparel maker. So over the next 2 or 3 weeks and into the future, we're hoping to grow as a club, but we also have a specific set of goals in mind. The first is looking at our portfolio on a construction basis rather than a stock by stock basis, and looking at ways to diversify risk. Obviously, we are an equities only portfolio, and so that by itself carries a lot of risk, but we have been in discussions with teachers and also individuals on campus who know much more about investment management, about constructing our portfolio, looking at beta, looking at some of the different ratios to try and diversify our risk. The second is to continue our conversations with Investor, which manages Middlebury's endowment. There is still a strong movement for divestment on campus, and so we're hoping that we can serve as some sort of focal point, maybe, for Investor and the Middlebury students, where opinions can be channeled through us into conversations with Investor. The third is the development of an investment fund. We're looking at trying to do impact investing in the local community, and using portions of Rise's profits to make that happen. And then the fourth is to encourage more speakers to come here, attend lectures both in and outside of, or on and off campus, as well as conferences in specific cities on topics such as sustainable investment. So we know that was a little bit long, but thank you for sticking with us. And yes, we are Rise.
Great. Thank you guys so much. That was really informative. And I would love to open the floor if anyone else in the group, or if anyone in the group has any questions about Rise, feel free to pipe in. And if your microphone isn't working, then you can also enter questions in the question chat box of the control panel. I was just wondering, while we wait for anyone to pipe in if they'd like to, where did the initial seed funding come from for Rise? Was it a donation, or did it come from the endowment? Where did that funding come from?
It came directly from the endowment.
Okay, great.
Nicole, this is Connie speaking. I do have a quick question. This is to Rob and Tucker. Did I get your names right?
Yes.
Perfect. I would love to hear more about the recruitment process, or your thinking behind. You mentioned you have 25 regular members. How do you get interest, and how do you make sure that they stay engaged into the 4 sub-industry groups?
So for recruitment, we normally start off at the beginning of the year by emailing different intro level class professors, such as teachers in the econ department and the environmental studies department, and just try to target those right off the bat. And then we also have a booth at the club fair. And then we also get a lot of our members just through word of mouth. People will also often bring friends with them who end up sticking around for, who become regular members. And to encourage kind of high retainment, I think this year what's been so successful for us is to have the industry groups, and I think that really gives us like a smaller, you're kind of part of a smaller group where your presence is really noticed, whereas when it's a larger club, when you're just part of a larger club, you kind of can stop showing up and feel that no one will notice that. But having and also having the smaller industry groups allows people to ask questions if they feel lost to the industry group leaders, so that they can kind of get caught up and feel like they're really learning something and getting something out of it as well.
That was super helpful. Yeah, because one of our biggest struggles was how do you retain high quality, I guess, members, and I presume you guys kept the size intentionally small so that you have a very selective group of students who at least know something or has an interest in, conducting due diligence and looking for portfolio investments and things like that.
Well, what we found is that there are, when they've kept the group small over the past couple of years, it really becomes, if you have time, and obviously you can make it mandatory where if you show up, you gotta perform, you've got to do all this work, you've got to put everything into it, you've got to give 10 hours a week to making this happen. But we found that didn't work out very well because a lot of people already have a lot of classes, a lot of commitments. And we are not a club that is particularly visible on campus in terms of that. And also, I think when you think about larger schools and their consulting clubs or their investment clubs, there is an active desire to be a part of that club because it feeds into certain jobs or certain industries. And so that's the motivation behind it. And so we don't actually have the pipeline or the network to make that an incentive for kids to join. So we found that people who join are more actively interested in just learning, working as much as they can, but not breaking their backs just to, do a DCF on a company. So that's just where we are at our point in our club's life, and we're excited to see where it goes from here.
Great, thank you.
Hey, this is Russell from the Dwight Hall Fund. We spoke on the phone a little while back. So I was wondering, so it's like a thing that we really struggle with is kind of education and getting everyone up to speed and able to kind of contribute, in the kind of an investment management, investment analysis process. And we have obviously like people who've been in the group for a year or 2-3 years versus people who are just showing up to college who have no background at all. And kind of balancing that has been really difficult for us, and kind of finding ways to have people feel as though, like they have a stake in what the group is doing, especially early on when they don't really, like they can't contribute nearly as much as other people just because they don't have the kind of background or the knowledge to do so. So I was wondering, like you guys have like a specific person who's like their job is education, which I think sounds really cool, but just like how do you bring people up to speed and like keep people excited, I guess, while they're learning, and then have them continue to learn so that they can really contribute over the long term?
So yes, this is something that we've run into. I've been a part of this group for 4 years, and I think we might have discussed this a little bit earlier last year. But we found, I think, 3 things that work really well. The industry groups allow you to get into that tight setting, and the group heads have done a really good job of getting materials and getting different types of websites and PDFs and guides over to people who don't know exactly what they're doing but want to learn more. They've done a great job and usually kids will say, I don't know enough, like please teach me, and they'll be actively wanting to absorb that information but when we're in that bigger group, it doesn't happen. So when we break down, we found that it's really effective. And obviously there's good leadership on that part. So we're thankful for that. And then the second part about the education, obviously there are some topics that people, like if you get a little bit lost, you're going to be sitting through a 20-minute presentation and go like, oh my God, that was the most boring thing ever. I'm just going to look at my laptop. But we found if we're able to effectively mix a couple of different educational components into meeting times. So Middlebury is a pretty, we like to think of ourselves as globally minded people, which sometimes we are and sometimes we're not. But integrating like a political economy, something about the political economy into the education piece, or putting some sort of social application question, like pose something to the group about, like, what do you think the benefits are of divestment? And integrating that around, like, what are ratios? What is a stock market? Then that's really effective, and it keeps people on their toes, and it sort of integrates it overall. So I think those are the two things that I think we've noticed.
Awesome. Yeah, that makes a lot of sense. Thank you. And then follow-up question that's like completely unrelated, but is also another question. And this we did talk about, I remember. But like I was just wondering if things have changed, because like we talked about shareholder engagement, and like you own 10 or 5,000, I think it was, you said, worth of every company that you hold, which is like enough money to file shareholder resolution. So I'm like wondering if you guys have like explored that at all, of kind of engaging with companies and trying to get them to kind of change their practices and working with other investors to form coalitions, doing stuff like that.
And I remember you talking about this earlier. We have talked about that. And you also might remember that we were going through registration, and we had a whole bunch of issues this year because the administration and the group that runs all the social organizations on campus, we had to go through a bunch of different administrative hurdles just to be recognized as a club again. But the long story short is we've talked about it, but we have not quite had enough time to make that a reality. And hope that's obviously part of the goal in terms of the reaching out to lecturers, reaching out to conference, or being a part of conferences, but also shareholder engagement would definitely be something we want to look at, and has been actively expressed by a couple members of the club. Like we've got a lot of social activists, and they are itching for the opportunity to send an email to Biogen about their manufacturing processes. So we're excited about that.
Yeah, and I think also just for us, it's kind of helped build our brand a little bit too, and we have it's like activism, like you just said, and that's sort of in vogue these days on college campuses, at least ours. So we get written up for doing various things like related to shareholder engagement. So if you're kind of trying to build the brand and build the alumni connections, all these things that are super long term, that just could be something that helps.
Yes, that's a great idea.
Thanks.
Have you guys had, do you mind if are we allowed to ask questions back to the community? A bit of that, and has that been it sounds like you have, but has that been positive for the most part?
Sorry, you broke up a little bit. Has what been positive? Just shareholder engagement?
Shareholder engagement piece, being more active socially.
Yeah, definitely. It's been great. I think the people who are the most engaged with the group and the most kind of committed and most excited and feel like what they're doing, makes the biggest difference and stuff, are working more on that side. We also do community investment, and we've kind of lumped those two teams into one team. So we have kind of shareholder engagement / community investment, and then we have the portfolio management team, where so the people on the shareholder engagement stuff are definitely more engaged, for lack of a better word. And it's been great. Like one of the only real downside that I can think of is it's kind of split the group almost into two groups where there's not a ton of interaction between, like people on portfolio don't necessarily know what people on shareholder engagement are doing all the time, and vice versa. So it kind of creates a tiny bit of a disconnect, but like huge net positive, and like everyone who does it loves it.
That's really cool. And have you guys been effectively able to voice a collective opinion instead of maybe we have a lot of opinions within the group, and so is there a democratic decision that forces or gets the shareholder engagement committee to engage on a certain issue, or is it more of they decide sort of where they're going to engage?
Yeah, so like right now we're in the process of like picking another company that we want to start engaging with, company that we don't yet own. And so right now, like basically every meeting we're having people pitch different issues that they care about. Like one is that I'm really excited about is kind of racial justice and like surrounding the prison system, and like asking Costco, or someone just did this year, asking Costco to disclose where they have prison labor in their supply chain, because they have a policy that says we don't support slavery, but prison labor is essentially slavery, and like things like that. So like that's been a big topic of discussion. We've also continued talking about climate change and about women in leadership and gender pay ratios and stuff like that. So there's kind of like people are constantly bringing in ideas, and then we just kind of debate and discuss, and eventually we'll focus on one thing, because that's kind of what we're like limited in that, just because we don't have a ton of money to throw at shareholder engagement. But yeah, I would say it's a pretty democratic process. And then once we kind of have our options down to like the last 2 or 3 things, or 1 or 2 things, then we bring it to the whole group. So that includes the portfolio team, and like everyone talks and everyone debates, because even if you're not on the shareholder engagement team, you still have thoughts and ideas that are of value. Yeah, and then the last time we did it, we had a group-wide vote, and that was how we decided it.
That's a great way to attack it. And thanks for sharing.
Sure.
Great. And thank you guys so much. I think for the sake of time, we'll probably move on to other agenda items now, but I'll absolutely include Rob and Tucker's emails in our follow-up notes to the group, and hopefully they will continue to be engaged in this group and bring other members from RISE in as well with a student turnover. We had a few other additional questions in the chat box that were also great. I would encourage people to follow up, but I just want to make sure we can touch on other things in the agenda. So thank you both again so much, and that was a great, rich discussion. Really happy to have you guys as a part of this group.